Good day, all. Ira Epstein of Linn Associates with your agriculture update for Wednesday. And we are now on the 27th of March, 2019, about 1:25 p.m. Central Daylight Time. As you can see, the grain markets down in the corn, down hard in the soybeans. Remember, on Friday, you're going to get your USDA report about supplies, and we're also going to get some acreage numbers. And that's what this market's looking at right now, trying to figure that out. You're also getting a reasonable break in the gasoline market. You're down a fraction now, and I don't call this a big break in the crude, but the market is down on the day. And as we take a look at the dollar, up a little bit, but it's given up the best part of the day at this point. Stock market a bit lower, metals a bit lower. As we come to the soybean market, is the market going to have a down week? Right now you're 15 3/4 cents lower. That'll put you back underneath the resistance line, which was the 18-week moving average of closes at 903.5. When we come to the daily chart, if I take today's action off, you can see the market was maybe what we can call it had consolidated in here, and today was the breakout. In fact, you've got lows that are breaking through this whole pattern. So not a very good looking chart. Bearish at this point, but not in a downtrend as defined by one thing: the higher high and lower low. Certainly the market's been coming down on the broader picture. You can see that. But as I chart, I'd have to get a pattern here that makes a bit more sense. Now, when I look at the 18-day average of closes, the market hit it. If we take a look, 1, 2, 3, 4. Just missed it there, but then another day, another day, another day. My point is, it fought its battle. And now the market has decided that the move is to the downside. What bothers me about the move is it went straight down, hit the lower Bollinger Band. It looks like it's going to settle right around that number, maybe a fraction under it. We'll see where we come in, but you're pretty close to this number right now. What about momentum? It's down. So what we have is bias down, hit a downside target, and you've got the momentum coming down. Not a trend. You don't have the lower highs, lower lows. The meal market had a vertical move to the upside, and all of a sudden it's getting a vertical move to the downside. I wish you the best trying to catch those. The only way you could have caught this move is you're a bottom picker. That's pretty hard. Buying up here would have been difficult into the Bollinger Band, and in order to get this move down, one would have to just be a seller picking a number. I leave everybody to do their own thing. Momentum down, bias down, not a trend on the swing line. Now, a market that's reversing very possibly here is the soy oil. What makes me think maybe it's a reversal is you haven't lost the embedded reading. And until you lose that, rally attempts often fail. Now, if you look at yesterday's high, it was 28.85. You made a new low for the move today by getting to 28.52 under the 28.54 you had made here. You didn't get over that high, so there were some sellers against those highs. But if you clear that, you change the pattern to one of a lower low, higher high. I'm going to repeat, that doesn't matter when you have an embedded reading. The embedded reading rules the day. If you lose it and it stays lost for a full day and doesn't get it back right away the next day, often price in the 18-day average or the closest of these key averages, which in this case would be the 100, could come into play. In the corn market, you fought 2 days at the upper Bollinger Band. It looks to me like the market's trying to retrace to the 18-day average of closes. Momentum is turning down, and again, you've got a big grain report. I'll leave you decide what you'd want to do in front of that. 18-day average, 371.5. In the wheat market, I'm watching what wheat's doing right here. Notice that both numbers are over 80 today. They were both over 80 yesterday, not the day before. So you don't have an embedded reading. You have an overbought market that has hit its upside target, and now you have to see, is it going to back off at all? If it does, and you start getting this red line under 80, you just have a very overbought market that might want to correct back towards that 18-day average. In the sugar market, we went up today and tested that 1274 area. You got to 73. It didn't quite hit that number. Now the question is, what does the market do? It's gotten high enough that it either makes a run through the 1280 level, Or if it reverses under yesterday's low, and that number is 1240, then I think it starts another wave to the downside. Obviously I'd like to really get under 1233, but just by not taking out 1280 and getting under that, you'd start setting up some interesting looking charts. In the coffee market, I think the one thing I've been fairly consistent on is telling you each time coffees come up to this 18-day average of closes, it keeps failing right now, and that's no different today. It made a run for it. It got to 96.40. That average is 96.51, and from there, the market turned down and broke another almost 200 points. So somebody's looking at the same thing. In the cocoa market, you are overbought, you have a vertical move up, not a trend, and even if you take out today's high and create the pattern of higher lows, higher highs, you're right into a resistance of the 100-day average and the upper Bollinger Band. If it wanted to run from there, God bless it. If it doesn't, I understand it. A lot of resistance in an overbought market. In the cotton market, you've got here, if we look at the slow stochastics, both numbers over 80, both over 80, both over 80, both over 80 the day before. So we've got a market that's embedded, but again, you're going to get some numbers on Friday, and you're going to get them at 11 in the morning. What I teach is, why do you have to stand in front of a freight train if you don't have to? And these reports can run over you. That's the point that I'm making. So I think a lot of pros are now taking some money off the table. I'm not going to be surprised if the 100-day average is tested again. In the cattle market, you've really taken this market down hard. You've gone from 124.90 to today's low of 119.27. Again, it's one of these vertical moves. If you try to catch them, I wish you the best. What it kept telling me is being over this number was a good sign of strength. And once you took out 52.37 and right here, losing the embedded reading, and you lost it right there, game was over. And that's what you're dealing with. You're dealing with an unwinding of that. In the feeder cattle market, this chart's a bit better than the fat. Number one, if we look back here, did we have both numbers over 80? Yeah, but not the day before. You never embedded. You just got overbought. And now it's pulling back towards this 18-day average of closes. I'm expecting the support to come in between there and the 100-day. Wouldn't surprise me at all to see that. Momentum is still leading the market down, but I'm looking for that swath. It's about 200 points, 250 points, where the market, I think, is going to try to catch some support. When you have an embedded reading like you do in hogs, remember what I said, the fact that you break down, I think the pros are waiting to buy the market, and they certainly did that today. Yes, the market was down, but if you look at where it was 92.80. It closed 200 points higher than that and near the highs of the day. So I think they made their stand today, and I wouldn't be surprised if they took money off the table at the end of the day, but that's what I think they did. So we'll see where this all carries us. I want to remind you, if you're interested in trading futures, the grains reports coming up and all that, we have a futures trading kit that really helps a lot of people. And it's got in it our charting software. It's got explanations of how futures work. I give you trading rules, chart patterns, how money management works, exchange brochures. We point you right to the CME group, which has just got fabulous learning materials, and we point you there, and away you go. And I don't mean we just drop you off there. You'll see all the different looks as to the different brochures they have, what they're doing. Pretty interesting what to do with that. You get some ideas through here as to what we offer and what our brochures look like. And here are options. A lot of you like to trade options on futures, cause and effect. This is really about what's going on today. Inversion yields, in what's going on in the currency markets, what's going on in the interest rate markets, how it's affecting the stock markets. And then you get access to my different videos. Now this one's a pivot point, but we also have the Arun indicator. And this gives you an idea of what the CME group's brochures look like, explanations as to how it works, quizzes are in there. They really help you learn a lot. So how do you get all this? Because it is free. Give us a call. Or better yet, go to our website. You'll see a carousel of free offers. Click on it, and away you go. I'm Ira Epstein. Have a good day.